This week, it's security money. The index has stabilized, but for how long? In our second segment, we are two pre-recorded interviews from Imperva and Fortra at RSA Conference 2023. Business Security Weekly starts now.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly.
Files are the lifeblood of business, and your employees will open the files they need to do their jobs, whether they're safe or not. With Votiro, your employees will only open files that are safe. Votiro applies zero trust principles to files and sanitizes every incoming file for your organization. Known and unknown threats are removed instantly, and the file retains full functionality, so your business is safe and productivity never slows down. And it's not just for email. The Votiro Cloud API works on web downloads, file uploads, cloud apps, FTP, and content collaboration portals. Learn more at securityweekly.com/Votiro. According to the 2022 Data Breach Investigations Report, the human remains the number one driver of breaches today, demonstrating that cybersecurity is no longer just a technical challenge, but a human one as well. But how do you manage the human risks of cybersecurity? It starts with measurement. Only by effectively quantifying human risk can organizations engage employees with relevant activities to truly change human behavior. That's human risk management. Map key human behaviors to the business risks that matter most to your organization for free by visiting securityweekly.com/living security. Welcome to Business Security Weekly. This is episode number 304, recorded May 1st, 2023. I am your host, Matt Alderman. Joining remotely, smartly, are my co-hosts. First, Mr. Ben Carr. Hey, Ben, sorry I missed you at RSA last week.
No, that's all right, Matt. I was just out there for a very short time, but yeah, glad to be here with you today.
Awesome. Also joining remotely, Mr. Tyler Robinson. Hey, Tyler.
Hey, Matt. Good to see you, buddy.
Good to see you. You weren't out at RSA last week, were you?
I did not make it for the first time in many years, actually. It was very weird not being there.
Yeah, you weren't the only one. I noticed a couple other of my friends that have been going for years weren't there last week either, so it's all right. If you weren't able to attend RSA conference this year, Security Weekly and Cyber Risk Alliance have you covered. Our host sat down with over 30 executives at this year's event to bring you the latest and greatest announcements from the show. To find all coverage, please visit securityweekly.com/RSAC, including 2 interviews coming up after this on the second segment, and I did 5 interviews while I was there with the team. All right, so security money segment, my quarterly segment around the market. And so it's always interesting every time I go in to update this thing. It's like, okay, who did Thoma Bravo buy this quarter out of the public market, and who do I have to replace them with? So that was KnowBe4. It actually wasn't a Thoma Bravo acquisition. KnowBe4 came out of the market this quarter. I announced this last quarter, so I had to find a replacement. So I went deep to find one. I actually pulled one span into the index this quarter, gentlemen, and their market cap currently is only at like 600 million, but they've been over $1 billion. But it's harder and harder to find a replacement. There are not a lot of pure play cybersecurity companies left in the public market. It's been a little challenging.
Yeah, I figured you'd have to rewrite a good portion of this to get kind of back to that pure play. We're getting to that point where pure play is not even really a thing, and especially with a lot of the companies going private. I wondered how many hours you put in trying to find good replacements.
Yes. Well, the markets, all the indexes are down, so everybody's down a little bit, Tyler. So here's my challenge. Sumo Logic is in acquisition discussions from Francisco Partners for $1.7 billion, which means Sumo's in my index, which means next quarter, I'm going to have to find a replacement for Sumo Logic. I'm not sure I'm going to be able to do it. So this is when I'm going to get really, it's going to get really interesting next quarter. Like, what do? Do I pull in somebody else. I don't want to pull in the big guys though, because they're really going to tilt the index like heavily if they're not a pure play. All right, let's see.
What's the what is some of the non-peer plays that did not make the list? I was kind of curious on some things that were getting close to like where they could be a peer play, or they were starting to fit into a slot but were missing some of the criteria. Like what didn't make your list that was at least notable?
Yeah, so I didn't pull. Obviously, I haven't pulled in Cisco. Right, Cisco has a large security division. Some would say Cisco is a security company now, but they still have a lot of revenue coming from their networking gear and other stuff. So I don't consider them a pure play. So I've not pulled Cisco in. You've got Microsoft that's got doing a lot on the security front. As we all know, we talk about it with the E5 contracts, but again, they're not a pure play. Those two companies alone would heavily weight the index, which is what I've tried to avoid. The next one that I've been looking at is Fastly, right? Because they bought, was it Signal Sciences? Yeah, they bought Signal Sciences. Yeah. And so they are traditionally more of a CDN with the application security play. I've avoided them to this point, but they may be the next one that I pull in because they're a little more of a pure play than a couple of the other ones I just mentioned.
Where does Oracle fit into any of those for you, or any of the other kind of massive ones that just are kind of like Microsoft that don't fit a pure play but are making moves that are kind of affecting markets?
Yeah, so Oracle I've tried to stay away from. It's funny because when I was at Cyber Risk Alliance, we talked about Oracle. They think they're a security company, but nobody thinks they're a security company. And I don't think they are a pure play security company. There's a couple others. Trend Micro, Sophos. There are a couple others that are interesting. So Sophos was in the index, then came out because they went private. Trend Micro is still publicly traded. So there are a couple others that are more, they're kind of at the edges also, Tyler, but I've stayed away from some of them. And it's hard. It's really hard to get all the financials from foreign traded entities. Like Darktrace, who's in the index, I can never get earnings or revenue numbers from them. Like nobody, it's so hard to get their revenue and earnings numbers. So even though they're in the index, I know their stock price, but I can't get any other details about them. It's really challenging.
Yeah, it does make it a little difficult when you can't get the data.
Correct. Like,
do we have any MSS? I was going to say, do we have any MSSPs that are pushing some of that close pure play? You look at maybe like Dell SecureWorks. That's not a pure play, but kind of a separate entity. Or
SecureWorks is in the index. They've been in the index from day one.
Oh, that's right. That's right. You're right.
They were right at the cusp of the 1 billion valuation. I put them in my original index. They've been in there since. But then you have Atos, which is French, and a few others that, again, not necessarily a pure play. They were more of an MSP that's kind of moved into the MSSP space. So it'll be interesting to see what happens in the market. But the index rebalance every quarter is challenging because not only when they get pulled out, I have to go pull all the historical prices because my equations no longer work. So I have to go manually update all the history. Then I have to create a point in time because I have to rebalance the index, right, with the new vendor, and then everything updates. Because I keep the index, every time a change happens to the index, I have to realign the weighting to make sure that the previous and the next weights are identical so that there's consistency in the overall index. So it's a lot of work to update those. All right, so let's get into some of the specifics. So index closed at 1404.31 on Friday. So that's a 40% gain. It's up from last quarter, which is why this segment it's stabilized, right? We had been in a decline for the last couple quarters. We've kind of stabilized a bit. We're off the bottom, which is good. We're up, but the NASDAQ closed at 12,226, so they're up 84%. So the NASDAQ is currently outperforming the Security Weekly Index Fund. And this is traditionally true when we're in a down market. When we're in a down market, the NASDAQ outperforms my index. When we're kind of in a bull session, a growth session, the index typically outperforms the NASDAQ. It's interesting. So right now, because we're in a down market, the NASDAQ's outperforming the index, which is kind of historical.
It is an interesting marker, honestly, especially when you're thinking about the tech play and why that would be a thing in a down market. And honestly, I am surprised at the numbers from your report this year or this quarter because of what we were predicting last quarter and some of the numbers that were falling and the companies that were taking some very big risks from a spending and or layoff standpoint. So these numbers are actually much better than I thought.
Yeah, like I said, we've stabilized a little bit. Now I'll get into some specifics because there's been some interesting things that came out last week that I want to cover both in the public and the private side. But there have been some good layoffs, some big layoffs from public companies too. So in my notes, Forescout laid off 10% of their staff. HashiCorp, 2,400 employees. SecureWorks laid off a couple hundred. Okta, 300. Siren, which is basically gone, like they've completely liquidated, right? They had the big layoff. They were hanging by a thread. They're gone. They're liquidated. Like that was the public kind of layoff scenario last quarter. It was pretty brutal from that respect.
Yeah, the market's been pretty hard, right? There's been a lot of companies that have been impacted, and you're seeing it in the numbers. It's just it is what it is right now.
Yeah.
Now, do you think that those layoffs are from impact standpoint, or are those preemptive strikes and being proactive for stakeholders and shareholder meetings to keep the numbers at a reasonable rate? That's one thing I've been trying to figure out. Okay.
Yeah, it's mostly the latter. Yeah, Siren's the exception, Ben, because Siren was in desperate, dire straits, right? They were trying to find somebody to buy them. They ended up going the liquidation route. But all the other ones are preemptive strikes to get their cost structures under control to continue to show positive earnings results. We see this from the other tech companies as well. So this is not limited just to the security space.
Yeah, it's been pretty widespread. I mean, you've seen a lot of other layoffs in other parts of the industry, and I think they're just doing it to contain cost in the perception of a down market right now.
The other one we talked about last quarter was IronNet, right? Potentially being delisted. They did get a lifeline. They're hanging on by a thread. They're still trading in the public market, but they are, I think they were like 24 cents a share on Friday, something like that, 24, 25 cents. They're barely hanging on by a thread. They still are not meeting the minimum requirements to stay on the index. It's very possible they could still get delisted at some point, but they're hanging on. Some of the other key highlights. There are 2 sales rumors out there right now. Rapid7 came up a couple months ago. OneSpan sale rumors are out there. They're both now in the index. So you're seeing some of these public companies looking for exits, which is interesting. I think the most interesting news that broke last week was Tenable had their earnings report on Monday, right before RSA conference began. Reported great numbers. I had the numbers in this quarter's report. But what they projected was a slowdown. So what happened in their earnings reports was there was a slowdown in growth, 25% to 15% growth. So that was a little concerning, but then they changed their forecast and said, look, the market's slowing down. We're gonna lower our overall forecast. The stock dropped over 10%. Even though they had good earnings, stock dropped 10%. Next day, every single cybersecurity company in the index dropped 10%. Like that's how sensitive the market is right now.
Yeah, I'm not surprised. I think everybody's a little gun shy trying to figure out when the next shoe will drop. I think SVB obviously made people concerned, and then the fallout from that, and the continuing layoffs. I think people are just wondering like when's the bleed going to stop, and it's not foreseeable in the short term, right? I mean, I think people are expecting it to last through this year into potentially next year. So
yeah.
And then with the elections coming up, I think everything's up in the air right now.
Yeah, it's a little crazy. The First Republic earnings announcements did not help the markets when it came to the regional banks.
Yep.
Because they missed, right? That's just putting pressure on everybody right now. So to have the market actually up this quarter is actually is a little surprising with all the negative news that's out there.
But does that set up the next quarter for a disaster-looking numbers if they don't do things right? Honestly, when I see him scale this and kind of boost it at that first quarter to make it look really good, I always worry about that second quarter and kind of what happens once all of this kind of starts to flush out. But that's me.
Yeah. You never know. Like
Tyler has his sell orders in, or he's already sold.
Yeah. Yeah, he's short. He's short.
I'm shorting everything.
Now, it's not all gloom and doom. There is still good funding going on out there. There's still billions of dollars being raised. Now, I go through all the enterprise security weekly segments that Adrian does. I pull all the earnings announcements. They're in the notes for you guys. There's a couple that are interesting, right? The two biggest funding in the private sector have asterisks next to them. So number one, Sandbox AQ, Alphabet spin out raises $500 million. Well, of course they did, because they're linked to Alphabet, right? So obviously Alphabet spun them out for a reason, and they had good funding behind it. Number two is the Netscope $401 million deal, but that was debt. That was a debt round. It was debt financing. It wasn't brand new infusion of cash, right? So those top two are kind of like, really the best raise in the quarter was Wiz's $300 million. And that's a decent size raise in this market. Like $300 million is nothing to sneeze at.
Yeah,
no, that is a big raise. Especially for Wiz. Like they've been doing some very big marketing pushes even the last 2 years. But 300 million is like, that's either getting ready for a huge development cycle or their development cycle is coming to an end, and now they have that brand awareness and product push because it's ready to go. Like, I don't know. I'm curious.
Yep, they're going after that app space. The other one that was interesting, back to your MSSP comment earlier, Tyler, was Deepwatch's $180 million, right? So Deepwatch spins out from GuidePoint, develops a managed MDR, basically an MDR service. I was asking people, like, what's the difference between an MSSP and an MDR? And it was funny, the responses, right? An MSSP, focuses more on like the firewall rule changes, where the MDRs are more detection response. Even though the MSSPs are moving into MDR, they still get this bad rap. But they're building out a great portfolio of managed detection response services. They get $180 million last quarter. So, there are some really good, like solid raises in a down market.
Yeah, and I think the money's still happening on the PE side, right, too, and the VC side. I mean, people are trying to figure out where to put the capital that they have, right, into something that's going to potentially be a good value right now, right, in the way the market is. So I think that's one of the advantages if you do have a war chest, right, is you're able to put that money in.
The other interesting piece for me is the down round from Cybereason, right? I don't know if you guys saw the article, but used to be valued at $2.7 billion. They lost about 90% of their valuation with this last raise. Now, we know the struggles Cybereason's been in. We've talked about it on this segment before. They had a down round, and that is the risk for organizations that have not managed cash over the past 6+ months. That if your valuations got too high and you can't show the valuation to survive, sometimes you have to take a down round or go acquisition route. Cybereason can't go IPO, don't have the revenue to support it. So instead, they now are valued at about $270 million. That's a huge hit.
That is a big hit.
Yeah.
Yeah, I don't know. There's those down rounds and not playing your cards right early. Like it is sad to see some of those mistakes made by, I would say, more veteran leadership, where I would have expected a little bit different. But
there's still some good acquisitions too in this market. Thoma Bravo bought Magnet Forensics, so Thoma Bravo's still spending. Like,
of course they are.
Every quarter they're buying somebody. Like, They can't stop.
Every quarter, yeah. That's the VCs were saying. I mean, just because the market's down does not mean that their money went anywhere. They have to find these good companies to invest in. So they're really looking for those good deals of things that maybe wouldn't have went through earlier. The VCs money is all over the place. They just get the better deal now. So
yeah, it's fire sale time, right? Like where can I pick up good IP? Where can I pick up potentially good people for a very reasonable amount of money?
And Magnet Forensics is no small company. In fact, they're one of the best forensic suites that have expanded, like not just to mobile, but they have live acquisition across the network, live acquisition on the desktop, and then deep insights very, very quickly. Like I just recently looked at their product, and that's an interesting one from Tomo Bravo that I hope they do some interesting things with some of the other acquisitions and kind of build everything together. If they can actually knit some of the stuff that they've bought together, that would be awesome. But again, they're buying so much stuff. I see them kind of keeping everybody in their own little silo.
Yeah, I think that's unfortunate because I think that from a practitioner side, what we're looking for is more value out of portfolios, right? So, I mean, this could be a great time to bring things together, after an acquisition and really present a value prop that then becomes a much sweeter deal from a practitioner side when you're looking where to place that money to invest. So I think that's one of the things I was really hoping for out of this, but you're right. I haven't seen it. I've still seen a lot of things made in those siloed approaches.
Yeah, and we know there's interest from the PEs because they have a lot of dry powder to actually do some combinations and make some moves. It's just, it doesn't seem to be Tomo Bravo's MO though. But you've got 3 identity and access management companies they've pulled out and other products in the portfolio. I would love to see them roll a couple of these together and launch them back out. It hasn't been their style, but there are other PEs that are actually interested in doing some of that. Like, can you take 2 to 3 companies, build an end-to-end suite, and go after somebody solid in the space? I would love to see more of that too.
Yeah, and I ultimately think it would make a ton of sense because, I mean, we're seeing companies where it's like, well, do I really want to invest the limited amount of resources I have? But if there's more value, if it's a broader play inside of the security portfolio that I have, and I'm utilizing more value to the company, that makes a ton more sense to me. And so I really think that would be a real growth spot in the market to bring these companies together and make more value plays.
Yeah, let's hope it continues. We'll see. The couple other trends, right? I did see some slowdowns in the layoffs on the private side. There were a few. Hawks Hunt laid off a few, but they just took a round, which was kind of confusing to me. Couple others that did some minor layoffs. But it seems like we're through the majority of the layoffs. There wasn't as much layoff news this quarter because I think everybody pulled the trigger early, got those costs out of the business. So I'm hoping that downtrend continues, which means maybe at least from that perspective, we've kind of bottomed out in the market.
What is the long term like for this year? What did we predict from that December kind of money chat, and what have we already seen around that? We knew that there was going to be a zero budget. We knew that there's going to be some economic downturn, as well as some VC strategic purchases. What else did we say that we're starting to see that we're going to finish seeing throughout the year, do you think?
The big takeaway for me, I don't remember the Herjavec interview. That was what, October, November timeframe? What do you say was the last kind of leg to fall? What was that last one? It was the consumer. And the one thing we have not seen yet, Tyler, is consumer spending slowing down or cratering yet, which tells me we're not fully through this yet, which means we haven't bottomed. So the big question for me is, how prepared are people to be in a down market late into this year? And what impact does that have in later quarters? Like, that's the big unknown for me right now. It's like, until that happens, like, are we truly out of the woods?
And what if we do not see that? Does that mean that we just hit a peak and then the next year, first quarter, we start to see that full circle start to come around, and then we actually get the real downturn? Because I agree with you, especially with summer coming. Usually we see a little bit of downturn from that consumer buy by now, especially in the beginning of Q2. And I haven't seen anything but positive numbers on consumer purchase. So I don't know what that actually means from the market standpoint.
Yeah, that's the scariest factor. It truly is, because if it were slowing down, a lot of people would project Q3. If it doesn't slow down, people are thinking Q1 of 2024. That's an extra 6 months that organizations have to be potentially prepared for it. A full quarter plus, depending on when it happens in the quarter. Like, how many people are prepared for that? I think that's the big unknown. And outside of that, I mean, most of the trends I think we've seen, we see this every day, right? Every renewal's getting questioned. Every new product is going through major scrutiny. The budgets are there. They're just tighter, Tyler. And so what's happening is sales cycles are elongating, which is why the news from Tenable that they're lowering their future forecast is kind of like, well, of course it is, because every renewal's being elongated, every new sales being elongated. Therefore, it's going to slow down the revenue growth over a period of time.
Yeah, that'll be interesting. An additional 6 month runway is something that companies, especially small companies, like really have to contend with, and that's a big difference between what they have now versus an additional 6 month runway.
Yeah, exactly right. But I do like the trends from this quarter. I think they were somewhat positive. There's still some caution signs ahead, but all in all, it could be worse, but I don't know. I'm not sure that we're out of the woods yet. Gentlemen, thank you so much for joining me today. It's always been a pleasure. We're going to take a quick break and then air 2 pre-recorded interviews from RSA Conference 2023.